We call it cross-buy as opposed to cross-sell, because the whole concept is our members should want and pull and drive the next thing that they want to do with us. We give them the options, we show them what they can do, and then they make those decisions as opposed to us pushing something on them.
Hi, Jim Roos from the Banking Transformed podcast, and by far the most unusual place I've done a podcast to date. After 600 podcasts, I'm now in the Bonneville Salt Flats in Utah. And honestly, when I say Bonneville Salt Flats, we had people going 140, 160 miles per hour during this event with Loan Pro. Colton Pond, a good friend of mine from Loan Pro, his company put on this whole event, and we have some leaders from financial institutions, from credit companies, from solution providers, from very small solutions to the biggest solutions. And we're lucky today that we're going to get a good taste of the people that we've had at the event with completely different stories, which is pretty cool. So, Colton?
Couldn't agree more. And the whole premise of what we've set up here, and Jim, thank you for joining us, by the way. It is an honor
my pleasure
to know that you've done 600 podcasts, and this is the most unique.
Oh, by far. Second is way down the list. I mean, things you hear in the background are helicopters, monster trucks, cars doing it. I mean, there's a whole lot of crap going on in this desert right now.
Yeah, I love it. Well, we are very, very fortunate. One thing you and I have talked a lot about is modernizing the infrastructure of financial services. I've referred to it based on conversations with friends of mine on the path to freedom. And we have some of the leading financial institutions, in my opinion, that I've had the pleasure of knowing very well, who are somewhere on that journey. And what I love about the modernization journey is it never ends. It's not going to be done.
Yep.
And we got to think about how we constantly evolve. So we're going to bring three folks from executives from different financial institutions of different sizes, of different origins, and different focus areas to come talk about their modernization journey and just call those out real quick. So Kelli Keough at SoFi, she's the business leader of Spend, Protect, Invest, Save. Very catchy, and I love it. Kelly's going to join us.
She got a 4-page business card.
Perfect. We got Raphael Reznek. He's the CTO at Mascoma, doing really cool things.
Who's been a guest on the show before.
Yes.
Yeah.
And then Chris Black, who's the president and CEO of Thread Bank, and a unique perspective of a community bank and a sponsor bank going through their modernization journey.
And as you said, what's really interesting about this whole dynamic when you're talking about core is there's different ways to look at it. There's different ways to build it. As I mentioned today on the keynote, the smallest and the biggest financial institutions are pretty much doing it the best because it takes visionary leadership who want to have a resilience. And in the past, we've talked about resilience in a way that really dealt with fraud and risk. Resilience today means you're going to be ready for whatever the future brings you, and you're going to have a core that's able to adjust quickly. Does not mean you have to dismantle the current core, but you've got to bring the players together to give you a core that really will move you forward.
Couldn't agree more. Well, let's dig in and bring on our first guest.
Sounds great. So we're having our first guest here, was mentioned. Colton, do you want to introduce the guest since she was a guest at your event today?
I would love to. Kelly, welcome.
Thank you. It's
great.
Yeah, great to be here.
Awesome. So we have Kelli Keough, as I mentioned, who leads Spend, Invest, Protect, Save at SoFi. One just interesting aspect is I looked at your LinkedIn. We know each other, but as I looked at your LinkedIn as we're preparing for this, I noticed that you have a PhD in psychology.
Yes.
I'm a PhD dropout, so it doesn't really count, but I love to nerd out on psychology, behavioral economics, consumer behavior, which ties to your role at SoFi for sure.
Very much. I mean, the whole concept of SoFi is helping people get their money right and helping people manage the challenges of their life and be able to make great decisions and do that all in one place, holistically, digitally. And it turns out helping people through those emotional ups and downs, making great decisions is a big part of it.
100%.
So Kelli, you work at SoFi, and anybody who listens to my podcast on a regular basis knows I'm a pretty raving fan of SoFi because I really like the model. I certainly like your team at both SoFi and at Galileo, who's been on my podcast, been live guest and all this. And I'm wondering, SoFi's changed a lot over the years. Can you go over just a little bit of a quick history lesson for those who are not aware? They see it as a student loan company, but that's not the story.
Yeah, so back, I think 2011, SoFi was founded with the concept of social finance, being able to find others who would help finance the education primarily of Stanford students. And it was a peer-to-peer lending model at first. Then pretty quickly transitioned into a more traditional lending with lots of focus on student loan refinancing, helping people refinance their debt, and then expanded into personal lending. And I'd say that's kind of the second phase of SoFi's history. And then starting in around 2018, when Anthony Noto joined, we really focused on how do you serve all of the financial needs of our members. And that's when we became a nationally chartered bank. We have our invest offering, credit card offering, insurance, in addition to lending. So the whole concept of being able to spend, invest, protect, borrow, also all in the same place was, I think, that's part of our mission now.
I love
And
that.
it seems like it's very much like in South America and Africa, all these companies that really started as credit providers and then built out from there to build more services within that. You also, as an organization, have a part of the organization, Galileo with Derek White, who serves and provides back office transformation to financial institutions, while you're also using them as a partner for your digital transformation. A lot's happened in the last 3 years with regard to the growth and the diversification of services. What advantage do you have in the marketplace compared to a traditional bank right now in a marketplace that's so crowded and everybody's trying to get a piece of the action?
Yeah, well, I'd say first and foremost is we focus on experience, we focus on our members. And that holistic, member-centric is key. And we try to think across as opposed to just serving within, I want to come to you for a loan. We try to think about how do we help you share data across so that we can see, help, give personalized guidance. And then, I would say we have focused a ton on engagement. We started as a lending company, but one of the challenges when you start with lending is sometimes a loan is a low engagement product. You come, you take your loan, you may not even open up the app.
Yeah.
You just have it, you get the money and you go. But really what we've tried to do at SoFi is help bring people in. And we're really proud of the fact that our new products that we have, about a third of the new products that our members take out are from people who are existing members. So they're deepening their relationships with us. And I think that's partly because we have a lot of daily engagement experiences now too.
And financial institutions, traditional financial institutions, it gets really sticky when they talk about engagement because they're afraid of making a mistake. They're afraid of saying the wrong thing to the wrong people at the wrong time. Again, being the credit side, where you've already built trust in a solo type way, to expand that trust, I don't believe is as hard than trying to build it from this whole product where the internal organization is fighting with each other all the time.
Yeah, if you do right for the member, we call it cross-buy as opposed to cross-sell, because the whole concept is our members should want and pull and drive the next thing that they want to do with us. We give them the options, we show them what they can do, and then they make those decisions as opposed to us pushing something on them.
So we're talking about the core.
Yes.
Loan Pro is part of that,
Yes.
that core component.
One of our partners.
How are you continually building that core to be, as I mentioned earlier, resilient in a way that expands engagement beyond experience? Experience is not enough anymore. You need that engagement going on. But how are you building the core to be able to suffice to service that?
Yeah, so we are very fortunate that Galileo is part of SoFi. And at SoFi, I am actually one of the big customers of Galileo. Now, Galileo gives us a modern core that is modularized, that allows us to take components of it and build on that experience. And one of the things I like to emphasize is you might be able to have modularized kind of back ends and systems and different components, but what's important is on top of that you create a holistic experience. But what Galileo has done is with the modern core, it's helped us also move fast. We ask ourselves the question, first of all, how do you design something that's right for the members? We start with design first, and then we ask ourselves the question, where in our company do we already have this capability and how can we leverage it to get to market as fast as possible? And then that gives us a base that we can now start to build on using, I would say, even more modern technologies of AI, blockchain. We're going to see us start to really expand in those spaces, but we can build that on that modern core.
Love it. One question I have, Kelli, if you don't mind. So gave you the intro, spend, invest, protect, save.
Yep.
I'm a SoFi customer. I've never told
Thank
you that. But what I've noticed is you're always launching new products.
Mhm.
Y'all are incredible, and it's because of that modern infrastructure. How do you think about what products to launch, how to make sure they resonate with consumers, and the whole product development process?
Well, like I said, it starts with the member first, and we really have tried to start with design thinking. We do a ton of work just designing what is possible. Where could we go? We actually have 1 and 2 years of designs that we have started to concept out, and that helps give us that North Star. So as we are creating products then along the way, they are building toward that experience, that North Star that we want, and in the back end too. We actually have a North Star for where we want our back end services, where we want the core to be, how we want to leverage Galileo, and we are taking those steps along the way. That really helps us go fast and keep bringing new capabilities to market.
Well, I can't wait to see what those upcoming products are. You got me all excited now.
Good.
Last question on my side. We mentioned your PhD in psychology.
Mhm.
I want to know how you use that. Like, what are key aspects you take from your background in at psych into your day-to-day role leading Spend, Invest, Protect, Save at SoFi?
Well, I think first of all is that empathy for our members. Whether we are all in different financial situations, the reality is it's not easy, it's hard, and it can be overwhelming. And even the data that we get can be very hard to parse. And so first of all, it's having empathy with our members. And then secondly, my background was actually quantitative in psychology. So part of my background was in statistics. That's data. Understanding who, what they need, really going deep on the data to help get that deeper quantitative aspects of it is the other side, I think, of the equation.
My last question is, everybody's talking about AI, generative AI, personalization, all those dynamics. What are you working on right now with the idea of personalization, AI deployment, and what's going to make it different to work with SoFi than me working with a traditional bank?
Yeah, we have great work going on right now. We're working on what we call SoFi Coach really takes all of the data that we have that you've given us access to and helps optimize your cash, gives you ideas for what you can do next to better use your dollars that you might have lying idle, helps understand what expenses you have, where are opportunities to trim expenses. And you're going to see us continue to take that kind of coach model across all of our products. So for example, if you're looking for an insurance, that's a really hard thing to figure out what to buy, why to buy it. Having really kind of guidance through that process, we think there's enormous opportunity.
That's exciting because it's interesting because you're where most people are shooting for, and you're more similar to some companies across the globe in the way they've expanded their offerings. But I'm looking forward to seeing what happens. We'll certainly have you back again. Thank you.
Happy to be here. Thank you.
Thank you, Kelli.
Thank you, Colton.
Hey, we have another guest now for this podcast, a really fast-moving podcast, to say the least. Colton, why don't you introduce the guest from your event today?
Well, one, I will preface and say that Raphael is one of my closest friends and someone that I've really respected throughout the industry. So we have Raphael Reznek, CTO at Mascoma Bank, the president of Mascoma Technologies, which we'll unpack that and help the audience understand what that looks like. But Mascoma Bank, you said today, a 127-year-old institution. You joined, Raphael, how long ago?
8 years ago.
8 years ago. And what I've been really impressed is this modernization journey that you've been on. So if you can just quickly walk everyone through, briefly, because I know you've done a lot, that modernization journey and where it's led you today and the most impactful thing that you've discovered in that modernization journey.
Sure. Thanks, Colton. So I don't have a background in banking. It's all in technology. Arrived at the bank 8 years ago and was pretty surprised by the level of technology that we had available to us as a community bank. And we quickly realized that we didn't have a lot of control over the products we could offer to our customers, nor the channels we could offer those products in. So as we looked forward at what the future would look like for the institution, we quickly realized that a fintech or a large competitor, could quickly introduce new products, and if they failed, they could quickly refactor that product and try again. And we cannot do that. Our upgrades from our core provider come once a year. And our competitors can release products once a day. So we, like Amazon is able to introduce code every 8 seconds, and they're out there, lending $10 billion a year to small businesses. Those are businesses we should be able to lend to. So we wanted to be able to, without knowing what channel and without knowing what product, we wanted to be able to offer and quickly refactor products and introduce new products. And so to do that, we had to modernize from the core out instead of from the digital wrapper in. So we settled on a modern core, headless core, and we determined that we did not want to boil the ocean. We wanted to be able to iteratively integrate that core into our existing ecosystem and iteratively migrate an account at a time or 100 accounts at a time from our existing core to our new core so we could test it out and make sure things work right. And that essentially means that the customer should not be impacted by our migration. The migration is a technology issue. It should not be a customer issue. So we've, over the last 14 months, we've been live for 14 months on our platform. We've been able to migrate, move data, and not take the customer down. So they can be in the middle of digital banking doing transactions, and they have no idea that we're moving accounts around or moving data around behind the scenes.
Love it. Help me understand how that works. Help me understand the underpinnings, because we've talked about this a lot. Generally, a core migration in banking today is a flip of a switch. And what happens is you flip the switch late at night, right? You find a bunch of errors and edge cases. You got to hurry and solve those problems before the customer happens. How does it actually work? Like, how are you doing that? Because I know every bank and credit union would love to know the secret if you're willing to share.
Right. So a traditional migration is the flip of the switch preceded by 18 months of really painful work.
Yes.
So the idea here is you do that work ahead of time. And when you say flip the switch, what this really means is you are just repointing we have built an orchestration layer. And so we repoint the orchestration layer from one core to the other. So it's really just like an address change. So we have all of the data, and we present this data to digital banking, for example. We don't have to ask the core for the data because we have a real-time repository. And all we have to do is change the address of where that system of record is. So which core it is.
So Raphael, you've been at the center of this whole process. It's your baby, so to speak. Obviously, a lot of people are involved in it, but you have the vision for where it's going to go. That process, it's never quite as clean as we think it would be great. What was some of the aha moments during the transformation that happened that you said, man, didn't see that coming or didn't expect that to happen, both the good and the bad?
Yeah, great question. We had this concept that we were going to take Thought Machine Vault and just plug it into our ecosystem, and it would not be a problem, that there would be no issues moving data around. And we quickly realized that our walled garden from our legacy provider is that. It is a well-defended walled garden. And
there's a reason why people don't do a complete core.
That's correct. So we learned that our legacy provider does not want to give up the data in any sense of form, and they don't want to lose control of it. So we had to take control of that data. We had to take that away from the legacy core provider and own it. We were supposed to own it anyway. We're responsible.
Right.
The customer doesn't know that we use a particular vendor, that they look at us. The trust is with the bank, not with our technology provider. So the aha moment there, and it certainly caused an extension of our project. It added 12 months immediately, right? Just like that, determining that we needed to own that data and pull it out. That was an aha moment that was tough. Another aha moment was when we looked at our batch processing legacy core and our real-time modern core, and we looked at how we were going to be processing overdraft fees and NSF fees. And this was right in the middle of when there was some regulatory pressure to reduce fees. And we were doing this anyway ahead of that regulatory pressure. We've eliminated a lot of those fees, but we came up with a methodology with our new real-time core that allowed us to offer the customer, if they go negative at the end of the day, when we do our closing, we don't necessarily charge them the fee. We can give them an ability to make a deposit or bring money into the account over the next 24 hours and not charge them a fee. And then we also don't charge fees upon fees as well.
So it makes it so the evolution of what you did gave you the flexibility
Yes.
to look at each customer on an individual basis, on an
Yes.
ongoing basis. And overall, from the future look, it makes you a much more resilient organization from the perspective of if a new product, let's go back to COVID days and the loans that were provided, that type of product introduction out of the blue can be handled by your core much better than having to work with your traditional core provider. Now, are you completely away from your core, or are you running?
We're running in parallel. So
Okay.
we're running two cores at once, but they're presented as one data set to all of the peripheral systems. So when you log into our digital banking, the customer won't know that this account 1 is sitting on legacy core and account 2 is sitting on the modern core.
That actually is not a disadvantage. It's actually an advantage. Isn't
Yes, that's correct.
it? So, go ahead.
One aspect within the Raphael that I don't want to put words in your mouth, but a potential other aha moment that I know that you all have built around is understanding how the different products and financial services work. From deposits and lending are totally different, and different systems that can efficiently process those systems. Let's understand like your viewpoint there and how you connect the entire ecosystem together that Mascoma has built with all the different modules of your infrastructure.
Right. Yeah. So the ability to compose your system versus accepting a monolithic product from a single vendor is really important because no one is good at everything.
Yes.
So we want to be able to take best of breed and implement it quickly, not take years to implement it, but implement it in months, weeks and months. And the providers, there's loan origination systems, BSA, AML systems. We are looking at best of breed and implementing those and connecting them to our orchestration layer and doing it rapidly. So when we 3 months ago, we made a determination on a new teller platform. We had basically a 6-week proof of concept. They spent 4 weeks working with our team. We did workshops on all of the business rules that were needed to implement this teller platform. We then took 5 days. It essentially took them 5 days to go from not any type of connectivity with Mascoma Bank to demonstrating deposits on their teller platform, running through our orchestration layer and hitting our cores. So 5 days. That gives us that velocity we need to be able to test out new systems and prove whether it's going to work for us from a business and value standpoint.
So who does the responsibility go on when you're bringing in other partners, like LoanPro or somebody else, other components to be able to make it all work? How do you bring them up to speed on what you've created? Because you obviously have a very unique system overall. How do you bring them up to speed so that doesn't create its own friction? As I mentioned in our presentation earlier today, you're going to be held back by your slowest partner.
Yes.
And how do you keep them up to speed? How do you educate them on what needs to be done?
Yeah, so that's a tough one, Jim, because there are some providers that there are not really a lot of options around. So you're dealing with a legacy provider. And they, of course, don't know anything about our orchestration layer. And if we ask them to rebuild the integration on their side to our orchestration layer, you've just added 18 months and $500,000 to the project. So what we've done is we are able to pattern facade our own core so that, for example, a legacy provider likely has an integration with our legacy core. So we pattern facade. They think they're talking to our core, but they're really talking to our integration layer. So that way we don't have to slow the effort down, and we can use something that is considered mature from their point of view.
I love it. Well, Raphael, thank you. One,
you.
I would recommend any bank, credit union, fintech that's thinking about a migration, modernization journey to chat with Raphael. Like you said, came from outside of banking. I know you've had a lot of aha moments in banking of how it works and learned a lot through that process. And I know from experience, you're more than happy to take a call and share your advice. So.
Absolutely.
Well,
Thank you.
and interesting because it shows again, as we continue to show on our podcast, size is not the determination as to if it's going to work or not. It's not even the technology as much as we talked about it here. It's the leadership. If you weren't in this organization, in the role you're at, that organization would not have made the transformation it did in much the same way that at SoFi and other places. If you don't have that leadership layer,
Yes.
it's just not a technology play. You can't buy yourself out of problems.
No, that is correct. 100%.
Great. Thank you
Thank you.
so much.
Thank
Thanks,
you,
Jim.
Raphael.
Thanks, Colton.
So Colton, our third guest in this triad of just amazing guests around transformation and core replacement. Do you want to introduce the third guest?
Well, I'm really excited for this one. Chris, welcome.
Thank you.
Chris Black is the president and CEO of Thread Bank. For those of you that don't know Thread Bank, they are a community bank at heart, but do sponsor banking activities as well. And Chris, what I'm really excited for is I've got to know you really well. You were here last year at Salt Flats Summit. Thank you for coming back.
Appreciate it.
Pretty cool environment. to
Amazing
chat with.
spot.
Yeah, and y'all have done a lot since the past year that we've been here. I'm excited to dive deep. We did a joint press release yesterday, actually, on some of the work that Thread Bank is doing to bring all of your data into a central source of truth, whether it's your community bank data for the loans and credit accounts you give there, or all of the fintechs, as you say, threads or branches of Thread into a holistic environment so you can have one source of truth. Very excited to dig in. Can you give us a little bit overview of, over the past year, the journey Thread has gone on from a compliance and modernization?
Yeah, no, appreciate it. And thanks for the invitation to join you guys. And nice to meet you, Jim. We've not met before.
Yeah.
But it's pretty simple for us. And we've been, so we put a bank group together about 4.5 years ago, recapitalized a small bank in East Tennessee, partnered with them with the mission to provide embedded banking, deposits, loans, payments into branches, partners that we think of as branches of the bank, so we can provide the best in class with the best infrastructure, data partners, risk management partners we can to allow those branches to really flourish, to do what they do well. So in order to really do this in the way that our vision has always been, which is really becoming reality, we talk a lot about homogeneity. So homogeneity of data, homogeneity of our risk management framework, and then homogeneity of the technology and the payment rails. That doesn't mean that we have one infrastructure partner who is doing everything. It means, as with LoanPro, we have homogeneity on the credit ledgering side, and that's what we're building with you guys to that end. Same thing on our embedded banking and bank infrastructure and kind of core deposit infrastructure, homogeneity in that sense. So then this is how you build for scale. So we don't have analysts going into one platform for this disparate activity and another platform for this and another for this. So we really create that. I keep using the word homogeneity because that's the point, because that is what inevitably enables the scale for our partners to do what they do best, which is to source, service, and build and scale heterogeneous use cases, whether it's small business verticalized or even horizontal that provides very strong technology, customer engagement, ease of running their financial lives. We're just taking the banking and then the banking rails to where our customers want the bank to be. Instead of making everything about the bank, we take the bank to where they are. And so this journey really over the last year has just been an acceleration of fulfillment. And each of these things, at the end of the day, lead to more ability to be more compliant, to be more efficient with data, to be more able and prepared to how do we truly deploy artificial intelligence in a way that helps our partners, help our joint customers to be have the best financial banking experience that they possibly can.
I love it. Well, I got to highlight two premises. And the reason why I love Thread Bank and what y'all are doing, Chris, is because you're validating two key premises, assumptions that we as a management team at LoanPro made about 2.5 years ago when I joined, we started focusing more working with banks and credit unions. One is that the modern infrastructure core provider of tomorrow will be broken up into 3 main components: deposit, lending and credit, and wealth. Y'all have done an incredible job leading the pack of banks and credit unions in that journey. And then the second is we saw in embedded lending, embedded finance, the debacle and collapse of Synapse and the utter disaster of what that was. And the one things the regulators have hit really hard on is you need real-time visibility and insights into what's going on. You are the bank. You hold the responsibility for compliance. I had a debate with someone once on who holds the compliance hold. It is the bank.
100%.
The FDIC is knocking on your door,
Yeah,
or
never,
the
never
regulators.
will be different than that.
But what you've done a great job is centralizing that data into a central source of truth. So you do have real-time insights, and y'all are doing an incredible job. So.
Well, no, I appreciate it. It's such a massive team effort on our team, and that team is, in our management and employees, obviously inside the bank, our board, investors, highly engaged, people who are experts in banking and in technology and financial technology and entrepreneurship. An amazing network, things that we've developed with the network that we've extended through you guys and developed that. But this was the view from the very beginning, that the bank is the center in the United States of all banking activity. And that's where we've gone awry, that many people did not take that to heart and went and unfortunately hit easy buttons. But the easy buttons were set forth and out there out of necessity, because it was very difficult from either a regulatory standpoint or perhaps an infrastructure standpoint to do the type of things that you need to do what we do at scale, right? And in a homogeneous way. And so that's what created FBOs and has created the opportunities for many non-banks to take over banking activities, which are first and foremost compliance related, right? That's first and foremost what banks are here to do. And that's all we're doing, is reclaiming those banking activities run by the bank, centralized by the bank, to enable our partners to really do what they do so much better, I would argue, than any bank. And I hate to say that, because that's contradictory to many validated and really strong opinions, and it's an overgeneralization. But when we look at a verticalized, let's take a generic idea of accounting. So we may have a partner who is just, they are the most amazing small business accounting technology firm out there. We plug banking into what they do. It makes their ability to service that customer that much better, and no bank could ever deliver that full stack solution that we can. And so why fight that? Why not empower them and have the oversight and the management of the data, the risk, the compliance to make it all work ultimately for the bank?
So banking is known for its silos in not a positive way.
Yeah.
You're building your core conversion in silos, just visually. How do you how does the data come to data? How does the relationship get managed on top of organization? I mean, they're not handling the deposit data. They're not handling the other components of the data.
Yeah.
How's the roll-up handled?
Yes, because it's all built on modern API first infrastructure, right? So today, our partners are, many of the partners with their bank partners are very siloed by definition, and they're siloed amongst different banks. So we're bringing everything together, that capability, through one bank charter. And it may be different underlying infrastructure, right, that creates those silos, but then in the branch, those threads, those APIs, that connectivity into our infrastructure comes together into the branch.
Yeah.
And so that's how you eliminate the silo. And so then we capitalize on the capability of our partners to service that customer in the branch with all those different data elements and different APIs. And we do the same thing on the back end.
So that said, because AI and everything having to do with, if we ever get to the agentic AI, the way it's being talked about, how are you set up? How are you setting your organization up for that evolution? Because again, you have to have that combining of all the data, but you also have to be able to have it spurt out the new insights from that among 3 partners. So how does that roll up and go back in again?
Well, just like any construction, the footings are the most important part, right? The foundation. And so that's the critical nature of this, is the data foundation, the structural foundation, the vision brought to life with partners like LoanPro, and then having the right talent and the right folks making the assessments, the judgments. We just hired a gentleman named Marty Miracle. He's our chief digital officer. He has a long track
Marty
record.
Miracle.
His name is Marty Miracle.
That's a high bar for somebody to have to live to.
And I don't want to tell everybody that he lives up to it, but it's a great name. Yeah. It's a great name for Marty. But his experience, and he's the right person at the right time to really, bring and envelop this vision together with that experience of he's both a data and an AI expert in banking and in sponsor banking.
So you're really building the resilience for what the future is going to bring. Okay, so we asked this
and
before.
The adaptability, right?
Yeah, and we asked this earlier today of a couple organizations we talked to. What were a couple aha moments, either positive or negative, that happened in the process? You go, didn't see that coming, good or bad.
Yeah.
And how have you evolved because of that?
I think I don't know that we necessarily fully understood the need for homogeneity, but where we started this was, again, out of necessity. We knew it was important, but we applied it first to BSA because we were just looking at just the incredible cost burden that BSA activities within banks represent. Yep. and AML, especially when you're doing volume and scale that we're involved in. And so we said we've got to have all of our data in one spot. We've got to transform it, normalize it, and put it into one AML transaction monitoring system. So our BSA analysts don't have to go, and we don't have to be scaled for 4 or 5 different systems. We want them in one. And as we validate and prove that out, then that can just be extended to kind of every possible extension. I think about cores as if you think of a headless core and how far up to the hairline can we take this homogeneity to capitalize on efficiencies, AI now interspersed within that over time, to then allow for as many differences as possible at the top of that, which is the customer funnel, which creates the differentiation, the stickiness for both us, for our partner, that reduces customer acquisition costs, reduces churn, increases margins, right? All the things that any business wants, and particularly technology companies. And it creates, and we're in a situation, we're observing our deposit behavior, and these are the most core deposits of anything that you can imagine. And so this is incredible activity for banks because our partners act as relationship managers for us on our behalf because of the way we structure these things together.
My last question, I'll give Colton a way to wrap it up, is in the process you've gone through, in what you've done over time, what is one suggestion you give an executive in an organization your size or larger or smaller as they're embarking on, and assuming that everybody's already embarked, but trying to go through that journey? What's the one recommendation or one thing you go, you know what, you better get this right?
No question, all in, commitment, no dabbling, and you've got to understand the fixed base of this type of operation is really significant. The requirement, you can't have a half of this or a half of that or half of this, right? In terms of personnel, in terms of data, in terms of compliance monitoring systems, and all that type of thing. So to folks who think it's the easy button and of deposits and some great interchange revenue, that's just not the case.
The good news is the easy button now is being hit because you made the whole process easier going forward, which is the big thing. Colton?
Yeah, Chris, I just want to say thank you. I sincerely mean it. The premises that y'all are validating on modernizing your infrastructure and deposits lending and then wealth separately, and also bringing as a sponsor bank all your data into a centralized spot. The one thing I didn't mention that y'all have taken even a step further is LoanPro by nature is a servicing platform. It's what we do. So heaven forbid, if the regulators ever said, hey, Fred, you got to take over servicing that portfolio,
That's right.
You turn it on tomorrow. Like, you start servicing that portfolio immediately. And those are the kinds of controls that we need in the ecosystem that enable embedded finance, embedded lending to continue. Because there's been a lot of talk from folks that I strongly disagree with that, with all the regulatory challenges, embedded finance is going away. Bullshit. We live in a system where it's based on supply and demand, and there is too much demand for it to go away. It has to be done the right way by organizations like Thread Bank. So I really appreciate you leading the charge on leading the industry forward.
Well, thanks. It's probably too much credit, for sure. We're doing what we need to do to be successful and really to manage the risk and the opportunities that we have in front of us. And maybe if I can, the one thing I'll say, I've said this a couple times, and I speak, and people who know me that feel like, you speak in analogies, because I'm trying to paint pictures to communicate. And this is something I've said a couple of times recently, and where I'm hoping the industry, which is banks, technology companies, and regulators, that we're all together, right, in this thing, that it's a matter of language, and the language differential that has been inherent has been the thing that has caused a lot of the issues that we've seen, and we've got to fix the language problem. I say, regulators and banks traditionally have spoken English, and we've learned every bit of English that we can. Where the market, the demand, is over here speaking, and it's provocative, but they're speaking Swahili. They're not just speaking like Italian or Scottish dialect, right? They're speaking Swahili. And they're going to continue to do that. And that's why so much non-bank activity has occurred and left the banking system, because the language spoken over here is not translating. We've got to work to create a translation mechanism to bring the banking activity back into the banks where it should be, which will make all of this much more successful as an industry. But that's a big commitment, and it's nice. It's very senior folks at agencies have directly said, I think that's right. And so that's a great start, and we're hopeful that is the case.
Thank you.
Thank you.
Yes, thank you so much, Chris, for joining us. I learned when I went to Kenya that everything you learn from Lion King is actually Swahili. So Hakuna Matata is the thing. Puma is how you say warthog in Swahili.
There you go.
So I love that analogy, and
Yeah.
thank you. And Jim, thanks for being here. I sincerely, this as a friend. Thank you for leading the industry forward on the thought leadership perspective, being here in this beautiful scenery at Salt Flats Summit, and diving deep into operational insights. It's been awesome.
Not a bad gig, as they say. As a final word from our three guests today, think we learned a couple things. Number one, size does not determine success. It can happen at any level. Number two, technology, as much as we've talked about it today, does not determine success. It's simply a means to an end. Right. It's the leadership factor. And I think what we've seen today, three different companies, three very different addressing different things, is that all three of the people that we've had have a passion, a leadership, and a vision for what the end game is. They know their North Star, and those organizations that are dabbling, that don't have the passion, don't have the place they got to go, do not know the order in which they're doing things, do not have a priority structure, will not succeed, will not become resilient. You're simply going to do things the way we used to do them, which is, let's see what we want to do now. Everything we've talked about too, fast as hell. I mean, the reality is everything that all three companies did it very quickly because they had the vision, because they had the passion, because they had the leadership, because they had the technology, but they knew where they were going, which makes it a lot easier. And finally, and you said it to me early this morning, let's not forget, this is not an end game. This is a journey. And I think that we can talk to you a year from now. We're going to have a completely different discussion. It's going to build from where we are. It's not going to be brand new. But I think the dynamics of what's going on in the core conversion is so important. And those organizations, no matter what your size is not an excuse, compliance is not an excuse, regulations are not an excuse, and even your employees are not an excuse, because your partners are bringing skill sets that you would never had internally and will never be able to build internally.